We got big results from JPMorgan and Wells Fargo on Friday, but we've got a slew of bank earnings. Goldman and Citi today, Bank of America tomorrow, Morgan Stanley on Wednesday. You get the idea. Let's bring in financials analyst Chris Whalen, chairman of Whalen Global Advisors. Chris, how important are these bank earnings to the overall market narrative?
We're trying to see, Dom, I think, how much impact December had on the investment banking side, especially Goldman, Citi. And then really loan growth is the other big question I think people have on the consumer side. Hopefully Citi will benefit from that. That's what they are, a subprime consumer lender. Goldman, I'd like to see if they make any progress with Marcus and their banking franchise. It's still way too small, as I've written in the past. And, you know, if they're not going to do an acquisition, they have to figure out a way to grow, and especially grow their deposit base. The deposits come first, then loans. So, you know, that's what I'm looking for with Citi and Goldman.
All right, so that's Citi and Goldman. Let's take a look at the bigger picture for financials right now. We've heard that the yield curve is not as important to banks as we once thought it was. So is the fact that we have yields as low, generally speaking, the way that they are right now, a hurt or a help for these banks?
The policy combination at the moment is actually a hurt. Medium to long-term rates are falling, which puts pressure on loan spreads. It makes it harder for banks to charge more for their loans. But at the same time, funding costs are normalizing, and they're going to continue to go up. We saw a 70% increase in funding costs for JPMorgan this quarter. You're going to see that. In fact, I think you're going to probably see funding costs double for U.S. banks over the next 12 to 18 months.
Now, the money center banks are one thing. The mixed money center / investment banks are another. Let's take us through the regional banks, because oftentimes they're a decent barometer for how certain parts localized in the economy are going in the United States. What is the outlook for those regional banks?
The regionals tend to have more pricing power, Dom. They can charge more for their loans. And then their deposit base tends to be more stable, and it reprices more slowly. So your BBTs, your regions, your SunTrusts, they're not going to feel the same impact of rising rate increases for funding as a money center bank, because half of a money center bank faces the market. It's not mom and dad's checking account, whereas smaller banks tend to have a much higher proportion of core deposits, and they reprice more slowly. That's been one of their basic advantages in the marketplace historically.
Just a few moments left here, Chris. Is there a favorite you have in this industry?
I own U.S. Bancorp. I just, backed up the truck in December when the financials traded off. It's the best performer of the top 5. The best value is probably, Bank of America at this point. Wells is going to be a work in progress.